Banks, lenders, and servicing companies already see the trends and are preparing for the foreclosure filing onslaught. This and much more in this week's video. Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to say, another episode of As the Housing Market Turns, or Bubble Pops, or Bursts, or whatever you want to call it this time around. Today is Thursday, July the 11th. Hope everyone's having a good week. A lot of interesting things to talk about today, but first of all, if you're not already a subscriber, please click the little button on the right there in the video and subscribe to my channel. All the subscriber counts increasing helps my channel grow, and of course gets good placement on YouTube, etc., etc. So I do appreciate that. The main focus today is actually going to be about foreclosure filings and foreclosure futures. Some interesting things actually came out in the news. We'll talk about in a second. A couple other newsworthy items, tidbits we'll get into as well. But first of all, for those of you that have contacted me, appreciate it. I know that we're still, some of us, playing email tag back and forth and trying to connect. The best way to contact me is via email. I tend to see that quicker, better, and respond to it better. And then what I typically would like to do is set up a call with you just to engage what your issues are, what you're looking for with help on, what your comments are, what you need, type of thing. So definitely email first, and we can set up a call time after that. All right, thank you. So excuse me here. Very humid in Florida today, the past couple of weeks here, and lots of rain going on, and allergies are up, of course, all the pollen, all the mold and mildew and all that, so it does get to you after a while. But I did find something very interesting that came out the other day. This was kind of a almost like a survey report synopsis from a group called auction.com. So auction.com, of course, has a website where you can purchase, real estate owned properties via auction.com's web portal. So they actually had this, I guess you could call it a distressed real estate marketplace disposition summit back in April. And they did some polling of its members and participants, and they actually came up with some very interesting information regarding foreclosure filings and really where I think the foreclosure market trends are going to go. Basically, and why this is so important is because, what I like to do is I like to look for signs, trends, data that can help us look down the road and see what's coming now, or predict where the housing market's going to go. And at this point in time, it's I think we all have our ideas. Some people may differ. I firmly believe we're headed for some more problems as time goes on here. Now, the nice thing about this is that we didn't have this data before. So if you remember the last housing crisis, I don't know whether you participate in it or were a victim of it. Who knows? But we all kind of have our recollection of what happened. But the issue at that time was we didn't see it coming, or we didn't have enough data to put it all together and figure out what was going on until it was too late. So people, buyers got hurt, sellers got hurt, mortgage brokers, real estate agents, lenders. The court system, it was chaos for everybody, all over the place. In the end, millions of people lost their home to foreclosures, lots did short sales. It just was a mess, and we're still recovering from that, to be quite honest with you. So we didn't have the information to track back then, but we sort of do have it now, and I think this is really important to make here. And why this is important, what I'm going to talk about here, is that we're getting an inside view as to what the lenders and servicing companies are thinking and seeing, and what they want to have happen, and how they're going to navigate through this as time goes on. So we're going to see what they want to do with this. So basically, there was a Disposition Summit client survey, and surveyed more than 60 bank and non-bank servicer clients, along with representatives from government agencies involved in servicing and disposition of distressed properties, which we know are foreclosed properties, pre-foreclosures, things like that. So very, very interesting. So some of the high-level findings for the survey, when this is where we really want to key on this, is that 40% identified the U.S. West region is most likely to see an increase in distressed inventory in the second half of this year. 72% plan on increasing their loss mitigation actions in the second half of this year. 40% identified expedited time to sale as their top disposition priority, i.e. they want to get rid of their homes quicker and make money. And obviously 46% said property preservation as the biggest disposition challenge they face. And what that means obviously as, if you're going to sell a home that's been foreclosed on, a lot of times it's not in a great condition or it's a bit roughed up. And so part of that is property preservation process, which is, they go and secure the property when they know that the property is vacant and no one's paying the mortgage, et cetera, et cetera. So these are interesting sort of comments we'll delve into now here, but just sort of seeing where this is going here. So again, my point to this and why this is so critical right now is they are preparing. So as we read through this report, it's clear that the lenders, the banks, the servicing companies that are handling the mortgages and the loss mitigation for the banks, etc., they're preparing for what's going to happen in the next little while, and they see the trend. And what I mean by that is the data that we get our hands on. So I can pull out, every so often, Adam Data Solution has a quarterly report on the foreclosure activity and foreclosure filings. Clearly, if you're a real estate agent and you know where to look, or you have the data services from somebody, you can look at foreclosure filings in your county, your region, your state, whatever. But that's stuff that's already that's transpired. So a notice of default's gone out, a foreclosure filing's gone out. So that's like a trackable event, a trackable item. What they get to see and what we don't see, because we're just not privy to that information, is they see the non-payment, okay, or the people that are going through some form of loss mitigation, which could be a forbearance or could be a loan modification, etc. So they have that information, which is in advance of notice of default and pre-foreclosure filings, etc. So these banks and servicing companies and lenders, they can see the trends. They know what's coming down the pike, in the path in the next little while, and this to me means that they are preparing. So again, typically how I see things down here, a person stops paying their mortgage, the lender could wait a year to 18 months before they actually start the process of obtaining the home back through the foreclosure process. So it depends on where you live in your state setup here. But for example, in Florida, it's called a judicial state. They file a notice of litigation, which is called lis pendens, which starts that's day one as to, yes, we're going to go through the foreclosure process to get the property back from you via this technique. So don't forget, as I said, the lenders could have a year's worth of non-payments in advance of that. So they already know what's happening. They see the volume building. They see what's coming down the path. Simple as that, guys. So just keep that in mind. All right. So interesting enough, they talk about weakness, and they say weakness in the West. So 40% of the respondents to their survey at their event picked the West region as most likely to see an increase in distressed inventory. Now, the inventory can be REO inventory, foreclosed inventory, or pre-foreclosure as well too. So again, people pick the West region at 40% over the three other regions. Midwest, they see a 23% increase. Northeast, a 20% planned increase, and the South, a 17% increase. Now with the South always tends to have higher, I guess you could say, volumes of pre-foreclosures and foreclosure activity anyway. So the 17% is not necessarily substantial here, but I guess, for example, the West being 40%. So 40% of respondents believe that's likely to have a major increase in distressed property here. So again, they mentioned here that in Q1 2019, year-over-year increase in the South region may be at least partially due to the lingering effects of the 2017 hurricane season. Given the above average foreclosure filings in certain areas like Harris County, the Houston, Texas area, they also were up 109%. Palm Beach County, Florida, up 109%. Orange County, Florida, up 212%. Now, to caveat that, I don't really recall Palm Beach County or Orange County being heavily hit with hurricanes, to be very upfront with you. I mean, I live here and we track them when they come, and I don't really see that as being hurricane related. But again, you got to sort of work with what you're given here. And funny enough, just to talk about that, where's my piece of paper here? Guess what's happening right now? So we actually have a tropical storm in the Gulf of Mexico. It's just off the coast of Louisiana. Today it got upgraded to a tropical storm, so the winds hit a certain amount. That's Tropical Storm Barry, and excuse me, it's projected to hit the coast around 7 a.m. on Saturday as a Category 1 hurricane when it hits landfall. So unfortunately for it's the Louisiana area, and the problem already is that they've had a lot of rain in the area, so Louisiana is already suffering from flooding, which is unfortunate. And also from a historic perspective, as much as the past few months, Louisiana already has a high percentage of distressed properties, a high percentage of properties who are already facing foreclosure or in the foreclosure process. So I would expect that if flooding may contribute to more of this, and if the hurricane makes landfall, we'll probably see this number kick up in the next year, a few months, 6 months to a year from the date it hits. This won't help the situation they're already in, and that's the problem with low-lying coastal areas, etc. So just again, we hope and pray that people out there are safe and hit higher ground and evacuate, because it's not worth kicking around your house. All right, to get back to here, Western markets increasing foreclosure starts, San Diego County, California, and this basically is we're looking at year-over-year increases in the past quarter. So San Diego County, California, up 16%, Salt Lake County, Utah, up 11%, Denver County, Colorado, up 20%. I don't know how to say this properly. It's like Sonoma County and Seattle, Washington area, up 36%, and looks like Multnomah County around Portland, Oregon, up 48%. So you can see that, and these are foreclosure starts, so foreclosure filings. So starting the process of getting that home back eventually through foreclosure. So, we have some pretty good indication that stuff is picking up now, and that's year over year from the quarter. That's not insignificant. And look at 48%, 38, 36%, 20%. So these are areas that have had good appreciation and good price growth. So this is where we find it's interesting. That's where I find it's interesting, the fact that, why can't you sell your property? Well, maybe it's not a funky mortgage issue that I'm having with my property that's putting me into foreclosure. Maybe it's life issues. Maybe it's job wage issues. Maybe something's happened that's changed the dynamics of my situation. And, why don't you sell and get out of your property? Well, I can't, because if I sell it, where am I going to go? You know what I mean? So it's better to, people are thinking it's better to stay in their home not paying, because they're avoiding paying mortgage someplace else, they're avoiding paying rent someplace else. So they kind of sit there and they literally squat in their own property, which is saving money as far as I'm concerned. But again, interesting to note that the West is seeing some of this stuff right now. So please, I would expect that's going to increase. 72% of the respondents surveyed at that event plan to increase their loss mitigation efforts in the next 6 months. So 81% of those expecting more foreclosure activity plan to increase loss mitigation. Why do they plan on doing that? Because they see it coming. They already see the lack of payments or the non-payments building and growing in their demographic, their database, their client base, etc. So they know that at some point in time, as they start filing foreclosure, that's just going to increase. The forbearance request, the loss mitigation, loan modification request, short sale request, whatever that is, they're going to see a lot more of these. So they see it coming. So to me, this is a telltale sign of what's happening in the future. So please be aware of that. And as a side note here, foreclosures are speeding up. People who believe that they could remain their property to 5-7 years, because that's what they heard people doing last year or last housing crisis, they're going to be rudely awakened, because now the lenders have better information, better data, better systems. Things are more automated. The court system isn't shell-shocked with respect to millions of foreclosure filings. So, all these, at the time, a lot of it was paper pushing and, it wasn't electronic. Things are changed now. It's been 10 years since this has all happened. So there's been a lot of, improvements in the process with everything from A to Z. So, the foreclosure filings are speeding up. Even here, I've seen foreclosure sale dates in July and August from filings from 2019, which means if it was filed January, February, we're looking at 6-7 months in to a foreclosure sale date. That's rapid fire foreclosures right there. So the lenders want this to move along. It's just part of their strategy. The faster we can foreclose on these, the faster we can dispose of it, the faster we can get our money back. So again, I've seen the trends locally. It's going to pick up big time. Foreclosure auction sales shorten time to sell by 228 days. So they like the auctions because, if it doesn't sell at the auction and becomes an REO, it takes them, on average, how many extra, 228 days to sell an REO. So as far as they're concerned, they're actually, not holding the property, less cost, less fuss and mess with the property, they're getting paid quicker, it's off their balance books, and life goes on. So that's why they prefer. So, again, they're stating what they see, and we know that based on what they've learned and what they see, they're going to push for those type of solutions. So again, foreclosure auction sales shorten time to sell their properties by 228 days. And again, this is just stuff going to the auction. I mean, obviously, lenders can still do non-performing loans or non-performing asset transfers between themselves, or hedge funds, large investors can purchase them as well too and get them off their books. But we're just talking REO sales here, so they prefer to go to sale at the auction. Now, foreclosure auction sales net proceeds by 11 percentage points more. So again, if they sell at the auction, that means they don't actually have to hold it for those extra 228 days. They don't have to service it. They don't have to secure it. All the things that require somebody to go and check on the property and make sure there's no vandalism, there's no squatters, there's no issues going on. All that cost is reduced. So they look at it going faster to get off our hands, faster we get our money, and also the cheaper it is in the long run because we're not holding this and having to manage these assets while they're in process. So again, these are things that are trending at the servicing companies and lenders that we need to know about. So again, just to bring things back into critical point here, this is what they want to. This is what I see. They prefer this. This tells me they prefer to take these right to foreclosure. So again, that means things are speeding up. That means that's what they're going to be pushing for. So as far as homeowners are concerned, I think they're going to be rudely awakened, and they're going to have to deal with things on a quicker pace basis, which boils down to back to the short sale mindset. Short sales can delay the process. Short sales can actually give the homeowner a settlement, a settled debt, as opposed to a foreclosure judgment. And what we don't even talk about here, but the lenders are becoming much more aggressive on foreclosure judgments. So there's been a lot of case law now and some new policies put in place where they don't have the statute of limitations working against them anymore. They now can spend a lot of time going after people. They're doing so. They're moving up those efforts. They're stepping up those efforts to go after people for that difference, for that judgment balance minus what it's sold for in the end. And they're trying to collect. They will garnish. They will come after. They will make your life difficult. So for people who believe that a foreclosure wipes out their entire debt and they walk away scot-free, it's not going to happen anymore. It doesn't happen. And we've got firsthand experience of people who are feeling the pinch, who are actually being pursued by lenders. And again, they're throwing stuff on the wall, seeing if it sticks, and it's up to the homeowner to prove out and say, no, this is not right, or you waived that right back in the day. So things are changing. We're going to see this becoming a little more aggressive. And why is that the fact? Again, lack of inventory. So this, if they can move it and make money, it's off their books. There's more inventory in the marketplace for the hedge funds, etc. Why not? So we see the shift in dynamic of what's going on here. So that's, again, I just found this to be very interesting, and I found this to really tell us what's going on behind the scenes, which we don't get to hear. So I think we're fortunate to see this. But the takeaway from this report is they know stuff that we can't see, and they're preparing for it. That, to me, is the number one thing right now that's very apparent. To sort of, further prove out this concept, there was an article that came out the other day from, it's called Property Shark. And they are, they do a lot of analysis and services in the New York City area. Well, guess what? Pre-foreclosures are spiking across New York City. And pre-foreclosures spiking in New York City, according to a new Property Shark analysis. On a quarter-over-quarter basis, they are up an astounding 31%. So I guess you could say from Q2 to Q1, up 31%. The city saw 3,070 properties entering the pre-foreclosure phase for the first time in Q2. According to the report, foreclosure likely to increase in coming quarters based on these numbers. So these guys are seeing trending upwards. New York is a big place. I know I've spoken to people recently from the New York area, and this is what's going on. So this is New York City itself, but we've talked about New Jersey being one of the highest per capita or foreclosures per 1,000 houses areas. So there's a lot of activity going up in that location, whether it's just life, whether it's taxes, who knows, it's causing problems for people, and more of this will be filed. And it wasn't just Manhattan. Each borough saw a significant spike, with Brooklyn coming in at 43% increase, Staten Island in at a 43% increase, and the Bronx coming in at 41%. Manhattan and Queens were both at 17% year-over-year increases for the quarter. So again, this even though that report talked about the West being, what they feel is the most likely to experience a surge, or the most, I guess the most likely to increase in foreclosures, that's sort of they're trending down because they're seeing those trends. This is what's happening right now. So New York City, that's a lot of foreclosures. 3,000 for the quarter. That's roughly 1,000 a month. That's a lot going on as far as pre-foreclosures are concerned, which again, the flip side is that's more opportunity. So if we're looking at that marketplace, certainly more opportunity to get involved here. But again, the takeaway for this is, quite frankly, it's happening. All right. We've seen slowdown in price. We've seen price deceleration. We've seen inventory sort of slowing down now. This is going on behind the scenes. This will eventually, won't hit the market, but it'll hit in a certain way where we have the ability to go after it, and that's important. So my business, my focus now is 100% looking at this as an opportunity to earn income and build wealth. So for people who are looking for their home to live in, you may want to pursue this. For people who are looking to earn some extra income on the side or change careers, this is happening now. Be one of the early adopters. I can talk to you in detail about this, and I can show you sort of the disparaging, what's active and what's coming, how the divergence in that, which you will be frankly astounded by the difference there. So that's the big opportunity here. So again, New York City spiking across, and we know that when I get the data from Adam Data Solutions, that we have areas that just, hey, this month or this quarter, this area of the country spiked for whatever reason. So it's happening to more and more locations, not just the traditional sunshine or Sunbelt states. We're seeing this in Midwest areas, in the big cities. We're going to see in some of the coastal areas that are going to get hit by some of the hurricanes and some storms. But it's sort of everywhere now. So it's not just to the mega cities at this point in time. It's sort of spreading everywhere. So please keep that in mind. All right, just some other additional information here. I just pulled this before I started the video. Redfin and Opendoor are going to do an iBuying partnership. So another transformation in how you can sell your house. So the discount real estate brokers from Redfin will partner with Opendoor, one of the leading home buying services, allowing homeowners to get an instant offer when they want to sell with Redfin. So I guess that boils down to, I'm assuming that Redfin, if you're a Redfin agent, lists your home or you engage Redfin, they're going to have a relation with Opendoor that, bang, we'll get you an offer. If you want to take that offer right now, we can do it. So just kind of interesting. So is that innovative? I think so. They're trying to move property, and they figure let's see if we can partner with one of these bigger guys and see if we can just strike when the iron's hot, because you list the property, you want to sell, let's get that offer right away. At least you've got a starting point, an option to take an offer, or you at least have a price point where if you can do better, you stick with the traditional way. If not, you can take your Opendoor price point. So I just found it was interesting. And again, Redfin does have kind of their own, I guess you could say, iBuyer type of service. But this really boils down to instant offer. So again, what I read into this is that Opendoor is going to be presenting their offers virtually immediately, and there'll obviously be some communication or something going on between the two companies, so that when the property is listed, bang, Opendoor gets that notification, and they've already got an offer in place, which I think it's kind of cool. But this is one more thing that we've talked about over the past few weeks, that where we see the real estate industry going to, that I think we have to be prepared for as far as home buyers and home sellers. So there you go. Now, just to sort of end off here, interesting enough, we have the Fed had a few meetings the past couple days. At least from what I understand and reading in the news, that there's certainly the language and the discussion was leaving the door open for a potential rate decrease by the end of July. Some of the comments where they are not seeing the economy grow as expected, and that could be, a lot of analysts and economists are saying, based on the language that was used, they do think there's going to be a slight rate decrease end of July. So we'll have to see that. But now we're back into finger pointing time here, and it's the U.S. home builders are going through what's called they call a perfect storm here. So Jerome Powell was Federal Reserve Chairman Jerome Powell was interviewed, and he echoed what most in the home building industry say, that there's a severe housing shortage, and home builders are struggling against high costs for labor and materials. So, now it's the blame game. So we're blaming tariffs for high costs. We're blaming immigration policies because we lost a lot of the cheaper skilled immigration back in the last housing crisis. And then that's the truth. When the housing market died, a lot of people that were involved in new home construction, they left. They were here working, and then they left because there was no work. So, I don't see that as, that's just what happened. It's just the natural progression. But now we're sort of going, well, the current administration's policies aren't allowing, open immigration, blah, blah, blah. So again, I'm not here to talk politics. I just find this interesting that, there's other issues that can contribute to this as well too. There's land prices. So you need to buy land. Well, if I'm a landowner, why would I sell land cheap when I can hold out for as much as possible and, increase my potential? So land prices are up. As well, entitlement prices. So cost of development and all the things that go along with zoning, all those type of things, impact fees, all that stuff, those are all more expensive now too. So you can't just say, we have tariff and material prices and we have issues with respect to skilled labor. There's other parts to the equation. I'm not saying either is right or wrong. I'm just pointing out going, let's tell the full story here. Again, I'm not political in my discussion. So, but interesting to see that there's some, again, I call it finger pointing, right? Just kind of like, National Association of Realtors or Realtor.com last time through basically saying, hey, we see a future with respect to, having low housing inventory in the future, better buy now. I mean, it's an opinion, and whether you react to it is it's up to you. But again, just interesting the fact that lack of sufficient home construction, especially at affordable price points, has led to severe housing shortage. The shortage continues to inflate home prices, keeping would-be first-time home buyers on the sidelines. Rents are now rising at a fast clip as occupancy is unexpectedly high in both apartment buildings and single-family rental properties. So, again, it's landlords raise rent. That's just the nature of the game. So there's a little bit of blame to be had by all parties here as far as I'm concerned. But that's just the nature of our business, everybody. That's the situation we're in. We're not going to suddenly have 1 million homes being built that are affordable over the next 6 months or a year. It just can't happen and won't happen. Not the way things work. We are seeing increase, or we will see an increase in the pre-foreclosure notice of default stuff coming up soon. The lenders and servicing companies already know it's coming. That report I talked about, it's taken place. They're going to instead of actually being hit with it and having to react, now they're going to at least be proactive so they can handle the volume. That's what they're doing, and that's what's different from last time, the last housing crisis when everyone was hit unawares. Now we see it coming, and apparently, which I think is a good thing, that they're going to prepare to deal with it, which will certainly improve customer relations and help people with better solutions to get out of their property or fix the situations they're in. So anyway, having said that, I want to thank everybody for the views today. Thank you for your likes and your comments. Please share the video. It'd help our channel grow. I really appreciate that. If you need to connect with me, feel free to drop me an email. We can set up a time to talk, whether it's home buying, home selling, real estate investing, how to get involved in distressed properties and these pre-foreclosures and short sales. Everyone, this is where the opportunity is. This is where the hidden inventory is, and we want to get there before the other people figure this out and start to tap into it. That's what I call the early adopter benefits. We know it's coming. We know it's growing. Our proof is there with these servicing companies and banks and lenders knowing it's on the way. So we have to be one step ahead of the game and be in a position to get our hands on these deals before they fall through our hands. Anyway, guys, appreciate it, and we'll look forward to speaking with you in a couple days. Thanks.